Hey everyone, welcome back to Corporate Decoder, the place where we turn Wall Street gibberish into plain English. Today we are diving into the world of mortgages with UWM Holdings. This report might sound like a snooze fest, but trust me, there's drama hidden in these numbers. Think of it as Real Housewives, but with adjustable rate mortgages. Before we start, if you appreciate getting straight insights from corporate documents, make sure you're subscribed. We also have a Discord community linked in the description below where you can share your theories and analyses with other finance detectives. So what is the big story here? UWM just dropped their financial report for the first 3 months of this year, and the headline is they lost a lot more money than they made. We will break it down so you can understand why this happened. This is UWM Holdings Corporation's report for the first quarter of 2025, basically January through March. We'll be focusing on the key financial figures to see how well they're really doing and if it aligns with what they want us to believe. UWM is listed on the New York Stock Exchange with the ticker symbol UWMC, so their performance is public knowledge. Before diving into the numbers, it's good to know how many shares are out there. As of early May, there were about 2,014 million shares of Class A common stock and almost 1.4 billion shares of Class D common stock outstanding. Keep this in mind for our per share calculations later. Alright, let's get into the meat of it. Their balance sheet, think of this as a snapshot of what the company owns assets and what it owes liabilities at a specific point in time. One number that caught my eye is the mortgage servicing rights, or MSRs, decreased from almost 4 billion to 3 billion. It looks like the total assets decreased quite a bit, from 15.6 billion to 12.4 billion, which isn't great. Their nature, 25 billion all in all. Liabilities decreased from 13.6 billion to 12.4 billion, which isn't great. Let's look at their income statement, which tells us how much money they made or lost over those 3 months. Total revenue came in at $613 a year, but here's where things get dicey. Then they had a major loss because MSR valuation adjustments came in at negative 388 and a major loss per quarter. And that means their loss per share number isn't good either. It went down from $0.09 to negative $0.112. Expats with over 9 ends to negative $0.112 for the 3 months. The company has a net loss of 247 million, a very big difference from last year's net income of 180 million. Big ouch. Cash flow is extremely important. It shows how the company is actually generating cash. Normally this number should be positive to indicate the business itself is making money, but here we see net cash provided by operating activities is negative 2.2 billion, but it's positive 593 million. A lot of this has to do with how they are selling off the loans. Member distributions paid to SFS Corp and dividends paid to Class A common stockholders look like they're getting a little tighter with payouts. Alright, let's dive into the notes. That is where all the information that they don't want you to see will hide. Here we see that the company has the right to repurchase those delinquent loans. The assets are re-recognized, but they say that does not impact the accounting for the previously recognized MSRs. Here we can see the standards that became effective this year, and the disclosures are not materially impacted, so that is nice. Here they go into detail how they calculate the numbers in mortgage loans at fair value with fair value adjustments. UWM uses derivatives to hedge some of its risks. One of the most important things is interest rate lock commitments, ISA, which is related to pull-through rate, and that means they have committed to a customer. They also have a bunch of receivables such as fees, advances, derivative settlements, and other things, so let's hope those are collected. This section concerns mortgage servicing rights, MSRs. These are assets that can bring in significant cash flow, but are also really sensitive to interest rate changes. Here we see the estimate is that they will continue to bring in value, and that is why they keep them on their sheet. Let's check how they are borrowing. They have a lot of warehouse lines with many different places, and they keep the interest variable. Looks like they are in compliance. Here they describe how they are splitting things up to 2025, 2027, 2029, and even 2030 in senior notes. These notes are used to secure more credit for them in the future. This is where they hold reserves in case the loans go bad. As of March 2025, it's almost 100 million. This paragraph talks about UWM's relationship with other business entities, which they have partial control of but are not consolidated into the report. SFS Corp owns a large chunk, almost 90%, so they will get most of the money the business makes. This also means they will get a large chunk of the payouts from cash dividends from the company. The most restrictive of these requirements require UWM to maintain a minimum net worth of 680 as of March 31, 2025. UWM was in compliance with these net worth, liquidity, and capital ratio requirements. Level 3 are trickier because they involve more guessing. UWM has a significant amount of level 3 assets, meaning their value is based on less concrete data. UWM rents their corporate campus from their CEO and other directors, which is common, but it's good to be aware of. Due to the company's tax agreement with SFS Corp, the company has to pay them 85% of cash saved in income tax. They declared a dividend to stockholders on June 18 and is payable on July 10, and a proportional distribution to SFS Corp. So right, we have scrolled through all the juicy bits. What are my conclusions? UWM is operating in a tricky environment. Rising interest rates can be a double-edged sword, boosting the value of their servicing rights, but hurting their new loan business. And that lost this quarter almost $250 million. That's not something you just brush under the rug. However, they still generate a significant amount of originations in the purchase market. They are also in compliance with their many credit and regulatory obligations. The market seems to agree, as their stock has not shifted much during the last few days. So my overall take is this: UWM is not in terrible shape, but that's not something to boast about. There is upside, but their success hinges on being able to quickly and swiftly flip those mortgages into assets. That's our breakdown of UWM's latest filing. What's your take on these numbers and what they signal for the company's future? Drop your thoughts in the comments. If this analysis was valuable, hitting that like button really helps, and subscribe for more deep dives. Don't forget to check out the Discord in the description. Thanks for watching. See you next time.